Hello and good afternoon to everybody who's joining our today's presentation from Vulcan Energy Resources here at the Ulster Research Roundtable. There have been quite many things happening in the recent months and weeks around Vulcan Energy, so I directly would like to hand over to Francis, who will lead us through the presentation today, and then following we will answer all your questions. Down below you will find a small chat box. Please use it for any kind of questions, and in our Q&A session later on we will get back to all the questions. So Francis, I'm really happy to have you here, to have Vulcan as a guest at our presentation today, and ready when you are.
Thanks, Harold. Well, thanks to everyone for your time. My name's Francis Verdeen. I'm the founder and executive chair of Vulcan. Excuse my headgear here. I had to switch laptops at the last minute. What I'll do is I'll just take you through the background on the Vulcan story from the beginning. So apologies to those who've already heard this before, but then I'll also provide some updates along the way of where we are and where we're going next, and then I suggest we go into a Q&A from there. So just a reminder of who Vulcan is and what we're doing. Our purpose and mission is very clear and very strong. It's really to become Europe's leading lithium business and the world's first zero carbon lithium business. So producing lithium chemicals with a net zero carbon footprint with a co-product of geothermal renewable heat and power. We're already doing this, at least for the renewable energy side. We're commercially producing renewable energy in the Upper Rhine-Graben in Germany. But we're building a much larger renewable energy project, a much larger geothermal project. And in doing so, we will also start producing lithium chloride and lithium hydroxide production as well with a net zero carbon footprint. So critical raw materials for Europe's energy transition, and also energy for Europe's energy transition as well. Our targets, we aim to produce renewable heat, which is increasingly a topic in Europe, for more than 1 million people by 2030, enough lithium hydroxide production at the same time for about 1 million EVs, electric vehicles, per annum. That's from our first 2 phases of production. And in doing so, to avoid about 1 million tons of CO2 emissions per annum. And this is from the delta that we avoid with current CO2 intensive lithium production. I'll skip through that because I think we're going to cover it. What are we building? Well, essentially, this looks very analogous to an integrated oil and gas project, like a liquid natural gas LNG project. So we actually have a lot of ex-oil and gas people, as well as ex sort of chemicals industry people in our company for this reason. It's just minus the hydrocarbons, minus the fossil fuels. But what I mean by that is it's an integrated energy and chemicals project. And you have the upstream where you have the well sites pumping up hot lithium-rich brine to the surface. You have the midstream producing energy and extracting lithium from the brine. And then you have the downstream, the central lithium plant, which is really the lithium refinery to reduce lithium hydroxide. So very analogous to an oil and gas project, as I said, just minus the hydrocarbons. So we're taking the lithium out of the brine using a sorbent. That process is powered by heat from the brine, and it's renewable heat. So this is the key difference in what Vulcan is doing. All of these processes are separately running in various industries around the world. So the geothermal power, it's already running. The lithium extraction using sorption, well, we've been piloting this for years, but it's already being used commercially in many parts of the world. The French are doing it, the Chinese are doing it, the Americans are doing it in South America. The difference is we're using renewable heat to drive that process, which is a heat-driven process, instead of using fossil gas to heat up the brine. So we're just engineering the fossil fuels out of the process. It's been a bit of a journey to get here today. We went from a startup in 2018, really a whiteboard idea, to listing in 2019. We then dual listed, so we're the first dual listed company on the Frankfurt Prime Standard as well as the Australian Stock Exchange. Um, Over the course of the company, we've raised about 500 million Australian, I think approximately about 300 million euro. And we've gone from scoping study to pre-feasibility study, to definitive or bankable feasibility study. And now we're going into execution mode. So now we're getting to the point where this project is going to be built, which is really exciting. Um, and over the course of that, we've developed a very well-equipped team of about 320 personnel in-house, with the full one-stop shop expertise of the geothermal development operations, the lithium extraction know-how, the lithium refining know-how, and that is one of the things that makes Vulcan unique. We're not outsourcing this IP; it's all in-house. Um, just to touch base, and this has changed over the last week, actually. So this is a very dynamic situation. Ever since we started Vulcan, we saw a very strong supply-demand thematic for lithium chemicals in Europe. Europe wants to produce about 1,400 gigawatt hours of lithium-ion batteries per year. Um, it wants to do this domestically, and it wants to keep its automotive industry going in this regards and not be reliant on batteries coming, for instance, from China. Um, Now, to do so, it needs to, for that amount of batteries, you need approximately 1.4 million tons of lithium chemicals, roughly approximately. Um, that is multiples of the entire global market today, just in Europe. Meanwhile, the rest of the world's demand is growing as well, and Europe produces 0 tons of domestically produced lithium chemicals at the moment. So, a substantial project like phase one of what we're building is about 25,000 tons per annum. We're talking, dozens and dozens of large new projects that need to be built to meet this demand. So we have a supply problem, not a demand problem for lithium in Europe. This has got more and more interesting recently. So Europe is reliant on China for lithium hydroxide in particular. China dominates the world supply of lithium hydroxide refining. We've just seen China in the last few days cut off the supply of germanium and gallium, which I think many people didn't really know about those elements, but they're used in chip making. China is going all in on developing a whole new automotive industry, making almost solely electric vehicles. It has skipped over the fossil fuel engine, knowing that it can't compete with with Western auto manufacturers, and it has gone straight through to electric. It is at the moment they're winning, so they are moving into Europe. They're taking market share alongside Tesla, and they have some of the best products on the market. Now, be assured that if China needs to restrict lithium hydroxide supply into Europe to favor its own domestic markets, it will do so. And then European automakers will be faced with the unpalatable choice of either not electrifying, so carrying on producing fossil fuel vehicles, which is not what the customer wants, not what the governments want, or not producing anything at all. So lithium supply into Europe is critical, and that's why we're building a domestic lithium supply chain of Europe, from Europe for Europe. We're also a renewable energy producer, and this is increasingly very topical in Europe, over obviously since the Russian invasion of Ukraine as well. But in particular, we're going to be producing renewable heat, and it's easier to find sources of power and renewable sources of power than it is to decarbonize and provide domestic sources of heating, which is very reliant on fossil gas. Um, we're seeing an explosion in demand for geothermal heating, and we've created really a one-stop shop for geothermal development. We have the drilling company in-house, we have the subsurface developments in-house, we have the above surface expertise in-house. So at a time when Germany and Europe is really pushing into geothermal to decarbonize its heating, Vulcan is very, very well positioned there as well. So that's just a bit of a snapshot on the macro. And we're also seeing policy tailwinds here as well. So at an EU level, the Critical Raw Materials Act, the Net Zero Industry Act, announced in March. We expect these to go into law by the end of the year, hopefully. This will give us a further big push on permitting and also on funding as well. So federal government is behind what we're doing, European Union is behind what we're doing, the states and the local people are all, I would say, vastly in favor of what Vulcan is building here. Now, just to zoom into the project a bit more. So, as I said, you have your upstream and you have your downstream producing lithium chemicals. The upstream, well, we already have some of these well sites already producing. So we're pumping brine up to the surface at the moment. We're producing energy from this brine and we're producing lithium. So we've been piloting the lithium extraction for nearly 3 years now. And we piloted at multiple locations to test the consistency of the brine. Well, the good news is it's consistent. The piloting has worked. It's been a success. We have used commercially available techniques, and we've proven that this works on the Upper Rhine Graben brine. Now we need to increase the brine production to surface. So we need to execute on our production and reinjection well sites surrounding our existing ones. So we're just increasing what is already being done, basically. And in the meantime, we're going to be building the chemical plants. You can see at Frankfurt Höchst, we'll be building that chemical plant as well. Germany and France are very lucky. They're sitting on the largest lithium resource in Europe. So just in our license area, we've defined 26.6 million tons of contained lithium carbonate equivalent. There is a very large lithium and geothermal brine resource under our feet here in the Upper Rhine-Graben. What this means is that we can scale up and we can grow as the market for lithium grows in Europe as well. We're not resource constrained, we are capital constrained by how quickly we can grow. So to give you an idea, this is phase one. This is, you can see on this slide, the total license areas that we have. We're adding more to that, and this is just the phase one. So we're concentrating on the core of the field where we have producing wells, and we'll be working out from there in future phases. So you can see in the core, the Insign plant where we're already producing, Landau next door as well, which is going to be supplying brine to us. We'll be increasing that production and supplying Frankfurt Höchst with lithium chloride. I mentioned we have an in-house drilling company. So we bought 2 oil and gas rigs. We've spent the last 18 months refurbishing them. They're almost ready now, so they'll be transported to site fairly shortly, and they will start drilling new production and reinjection wells. These rigs are electric, so we can keep to our net zero carbon footprint, and they're going to be increasing our brine production. But this is also an asset for Vulcan in the future, because there's not many rigs on the market in Germany that can drill to these depths. There's only about a dozen, and they're all very tightly held and booked out. So in the future, when we finished drilling all the wells that we want, I think that will take many, many years, because I think hopefully we're going to be building phase after phase in the Upper Rhine-Graben. But this will be an asset for Vulcan in the future, our in-house drilling company, which we call Vulcana. It's a long life sustainable asset. So we've modeled the lithium grades over time, and this is a multi-decade resource just in our phase one area. And we've been, we think, quite conservative with our assumptions as well. And one day, in decades from now, when the lithium runs out, what we leave behind is a renewable energy asset. And we've seen at Insign, it's been producing for over 10 years, and there has been no meaningful reduction in heat. So because it's driven by the heat from the mantle, ultimately, so what we'll leave behind will be renewable energy infrastructure. I mentioned we're increasing renewable energy production. That on your screen is the renewable energy plant at Insign. We're building a larger plant nearby. And with that, we'll be adding the lithium extraction as well. But you can see this has a tiny footprint. So compared to mining for lithium, but also compared to things like wind and solar, geothermal has a very small surface footprint. So that means it fits well into the Central European context. So the next stage, Insign is a small plant. It's only about 4 megawatts. We'll be building a much larger plant. So about 30 megawatts of power and about 30 megawatts of heat capacity as well. On the lithium extraction side, this is a really interesting point. So we're using an extraction method which, let's say, is the modern way of extracting lithium from brines. The legacy way is to use large quantities of reagents and essentially take everything out of the brine except the lithium. We use something called adsorption, which is using a resin to basically do the reverse, to leave everything in the brine and just take the lithium out. And this is much more efficient. It was invented by Dow in the 70s and commercialized by Livent in the 90s. And since then, multiple plants have been built. So there's multiple plants in China, and there's also more plants being built in South America as well, including by Eramet, the French mining company, using adsorption. But most of the sorbents on the market come from China or Russia. So what we've done is we've developed our own sorbent in-house. Now it's the same family of sorbents that was invented by Dow many decades ago, but it has some tweaks that we've applied to it to optimize it and modernize it. And we're going to be producing this hopefully locally. We already have produced it locally, so we're onshoring the manufacturing and the supply of sorbent and the IP as well. It's not Chinese or Russian IP. This is European IP for a European lithium extraction project. So this is very unique. This is really unique to Vulcan, and we have the in-house knowledge. We've tested this in our pilot plants, as I said, for nearly 3 years now, and we've successfully demonstrated that these sorbents work very well. So applying existing technology, um, tweaking it to suit our situation, and onshoring the IP. And now we're building the extraction plants for this sorption type extraction. So we're almost completing our optimization plant. This represents about a 40 million euro investment. And this essentially the purpose of this optimization plant is to train our operations team in a pre-commercial setting. So whilst we're building what's on the bottom of your screen there, the commercial plant, which we'll be building over the next essentially 2.5 years, we want to make sure that we are operationally ready at the end of 2025. So our team will be basically working on a plant that has all of the same equipment. It will be producing essentially hundreds of tons of material instead of thousands of tons, but it will have all of the same equipment, all of the same gear, and we're approaching mechanical completion of that. So we have announced that recently. Mechanical completion is targeted for August, which is next month now, which is exciting. And then it will start commissioning and production ramp up. And this will produce the first domestically produced tons of lithium chloride and lithium hydroxide ever in Europe. It will also produce the first ever tons of um, lithium chloride and lithium hydroxide produced with a net zero carbon footprint. So this is very exciting. This is a world first what we're building here, and we're very excited when we open this plant in a few weeks. But in the meantime, we're also placing orders with our cash position that we have. We're placing orders for materials for the commercial plant as well. So supply chains are still an issue in some areas, and we're making sure that we have our place in the queue for the commercial plant as we go into that execution phase now for the lithium extraction plant. And it's the same for the lithium hydroxide part. So we're using essentially chlor-alkali cells to do the lithium hydroxide production, similar that's been used in the chlor-alkali industry for over 100 years. Instead of sodium chloride, we're processing lithium chloride, but it's still essentially processing a salt using lithium chloride cells. Sorry, chlor-alkali cells. And we're working very closely with a company called Noram, which is the supplier of these cells, and they have many years of test work on the lithium side to back them up as well. So strong partnership there. We're the same thing. We have an optimization plant that's been built here. It will be located at Frankfurt Höchst, which you can see our plot there on the screen. That's where we're building our central lithium plant as well. Once again, we're already ordering the materials for our commercial plant. So we're going into that execution mode for the commercial phase as well. And the operations team will be training in the meantime there over the next couple of years. And importantly, at Frankfurt Höchst, we have space for 2 more phases of production after phase 1. So we have room to grow as we grow in a phased manner, which is really good. I'm really proud of our team. This is really a strength of Vulcan. We have about 320 people in house, spread across development, execution, and production. Once again, this is a very similar setup to an integrated oil and gas company as well. And a lot of our personnel come from an oil and gas background. They also come from engineering backgrounds, very well-known engineering firms, chemicals companies like BASF, Our head of production just joined us out of retirement. Actually, has 30 years operating chlor-alkali plants with BASF. But we have ex-Worley people, ex-Shell, ex-Bayer, Currento, etc. Some really, really good expertise in-house from the chemicals and from the energy industry. And th- these people, they are now on the ground, and they are actively building this project. So I think that speaks to our commitment to move forwards as quickly as possible. As much as possible, we're keeping the expertise in house. Of course, we work with engineering companies, consultants, etc. But there is a very strong team on the ground who are now in project execution mode. In terms of our timeline, so we are, as I said, in that execution mode now. We're targeting end of 2025 for our first production, um, and then basically ramping up commissioning and ramping up production from there. We always have a tight timeline. We are honest with ourselves about that. We know it's tight. We may have to rebaseline at some point, but we are certainly committed to end of 2025, and we think it's achievable. But we have to push very hard for it. Let's be clear. This is a tight target, so we'll continue to push. On the ESG side, um, this is one of the strengths of Vulcan. It's a company that's been built around a core ESG principle of decarbonization. We started with zero carbon lithium, and we worked backwards from there to find the best process, commercially proven process, and the best project to achieve zero carbon lithium. So we didn't start with a project and try to make it greener. It was the other way around. This means that we have engineered the project specifically to have a very low carbon footprint. And it should be the lowest in the industry. It should be the first net zero carbon lithium project globally. And we see the comparison there. So the lithium supply chain produces anywhere between 10 and 30 tons of CO2 per ton lithium hydroxide produced. If you extrapolate that out to electrifying the world's passenger vehicles, you're talking about 1 to 2 billion tons of CO2 just to produce the lithium to make those electric vehicles. So this is a very big topic, and Vulcan is very proud to be able to contribute to decarbonizing that footprint. But in addition, we also have a very small water footprint. We've recognizing that some types of absorption projects have a very high water footprint. We've engineered many recycles into our system, which means we, instead of using hundreds of tons of water, we use just over 1 ton of water net of products per ton of lithium hydroxide produced. That is I believe that's an industry leading figure as well. And we also, as mentioned, we have a very small land footprint. So environmentally, very strong credentials indeed. And this helps with our financing as well. Let's be clear. We have a very low ESG risk rating. And banks look at these when you're debt financing your project. And this contributes to the lowering the cost of capital. Permitting is progressing well. It's progressing broadly, I think, in line with expectations. It will be an iterative process. We have the permits we need to get started on the execution, and the permitting will be an ongoing process all the way through to building of the plant and entering into production. So it's an iterative process. We have a very strong focus on societal acceptance. So we have nearly 30 people who are working locally in the community. We've set up 4 info centers across the region, and we regularly hold events where we talk to the local people. Um, this project has a unique strength. We have a benefit to local communities, that is the renewable heat, which literally flows into the local neighborhoods. So there's a very strong, tangible benefit that people can get from the zero carbon lithium project. It's not just tax revenue, and it's not just jobs. So we see strong support for what we're doing. Of course, there are always opponents. Geothermal has opponents, just like wind and solar does as well. And some people you can never convince, unfortunately. But I think the overwhelming majority, and we're seeing this in city council decisions now, is in favor of what we're doing. In terms of the financing, so you can see conceptually we've split the project into what we call Special Purpose Vehicle 1, which is the upstream, and Special Purpose Vehicle 2, SPV2, which is the downstream lithium hydroxide side. And upstream produces lithium chloride and renewable energy, downstream produces lithium hydroxide. And this is part of our financing process. So you can see the capex split there. Total capex for phase one, about 1.5 billion euro, the majority of which is on the upstream, and then about 320 million euros worth is on the downstream side. Once we're in production, we should have a very low operating cost. That means we should have a very high margin, and that's because we're a fully integrated operation. So we produce our own energy, and we have a very low reagent process. So it should be a very low operating cost project indeed. Added to that, we have very strong revenues, and these are linked to our offtake agreements. So we have binding lithium hydroxide offtake agreements with Stellantis, which came with a 50 million euro equity investment. Also, Umicore, Volkswagen, LG, and Renault as well. So we're fully sold out for our first two phases, and this has enabled us to, including forecast prices, average around about a 30,000 euro per ton price. And banks want to see this because it helps with calculating the payback period, but also with providing assurance that we will have customers for our product in the first few years. The lithium market is quite immature, so banks want to see offtake in place. And this gives us attractive revenues. So we are forecasting over 700 million euros annual revenue when we're in full production for phase one. Remember, this is just phase one only. And you can see we go from producing entirely renewable energy, as we're doing now, to renewable energy really becoming a co-product, if you like, and producing less than a quarter of the revenues. So it will be predominantly a lithium chemicals project in the future. This gives us very attractive project metrics. So around about 26% post-IRR, post-tax IRR, and a 2.6 billion post-tax NPV. So it doesn't need to cost more to create a zero carbon lithium project if you have the right engineering solutions there. Financially, it is also a very attractive project indeed, importantly so. Now, we are post definitive feasibility study. We're now in the what we call the bridging engineering phase. So when we've completed the bridging engineering, we will formally commence the financing process. At the moment, we're in the preparatory stages. So we've done our market standing. We've appointed BNP Paribas as advisor on the debt side. We've done some market standing, which shows that 65% debt is achievable. So we'll be formally launching the debt financing process when we've completed our bridging engineering phase, which will be about September, October time. And we're targeting completion of debt financing to be basically end of Q1 next year for signing, and then completing in Q2. In addition to that, the 35% would be targeted for equity, and we have a lot of interest from strategics on that. So strategic corporates, oil and gas companies, chemicals companies who are interested in a joint venture with us. We're in discussions with a number of those, including, as we announced, we have a term sheet with a company called Nobian. It's a term sheet at this stage, so obviously subject to a joint venture agreement. But it's those type of strategic project level equity investments that we think are very suited to this project. So we reduce the dilution, the equity dilution in Vulcan. You can see the split there. So there may be, as we're conceiving with Nobian, an investment at the SPV2 level, separate to SPV1. So we may take in separate partners in both of those SPVs. Importantly, throughout this process, we have very strong support from ECAs, export credit agencies. So BPI France has provisionally said we would qualify for a project of strategic national importance. That means that the value of the covered portion of our debt by BPI France will be linked to the value of the offtakes with French automakers, Peugeot, Citroën, through Stellantis and Renault. This means that alongside Sace from Italy, who said we would qualify for doubling of our coverage because we're a green project, and other ECAs as well, we will have a substantial proportion of that debt covered by ECAs. And that gives banks a lot more confidence, and that lowers the cost of capital as well. So that strong government support is really important. In addition to that, we will be applying for some grant funding as well. We know there's some schemes that are becoming available now for European critical raw materials developers and producers, and we will be applying for that as well. So hopefully we can reduce some of the capex burden through that as well. I'll leave it there. So just to summarize, world's first zero carbon lithium project. Um, we've got about 160 million euro cash in the bank, so we have a very good cash position. We're deploying that now towards execution of the project. So we're building this in real time. We don't have all of the finance raised yet. Obviously, the total capex bill is about 1.5 billion, and so we're executing and we're building in parallel to raising that capex as well. So we will be updating our shareholders on the process of that financing. In the meantime, there's some exciting milestones ahead of us. So turning on the optimization plants, I think that's a major de-risking event that shareholders will really appreciate. And I think that will be the next few weeks and months. Starting drilling of the new wells. We have existing producing wells, but honestly, I think the market wants to see us drill some more wells and increase that production. And that we'll start drilling with our own rigs, our own teams by the end of the year as well. And strategic investors coming in. We already have Stellantis, we already have Hancock Prospecting from Australia, and some other big corporates. But I think a strategic partner coming into the project, like a chemicals company or an oil and gas company, I think will be a major benefit to us. And I think that is certainly a likelihood going forward. So some exciting weeks and months ahead of us for Vulcan as we start to really execute that project and build that project. I'll lay it open for questions now. I think there's already some on the screen. Um, I think the first question that I see: in your data, you prefer to use LHM instead of LCE. What is the reason for that? Well, the you're right. The industry standard is speaking in lithium carbonate equivalent, or LCE. We will be producing lithium hydroxide monohydrate. That's what our customers want in Europe. So hence the reason why we typically refer to LHM. I think we usually provide a conversion rate at the back of the presentation. So I think that is available online as well. But you're right. It's usually LCE, but because we're just producing LHM, we concentrate on that. And speaking about concentration, have you done any calculation about profit with less concentration? Uh, yes. So that is already built into our definitive feasibility study. As you would have seen in the slides, obviously we are taking lithium out. So even though it's a very large lithium resource, we do see dilution over time. That's normal. And we see the concentration come down over time. We like to be above 100 milligrams per liter lithium over the life of the project. I'm not sure that's the exact cutoff. I think you could go below that. But we see our model over 30 years of the project's life still being above 100 milligrams per liter lithium, and the model still makes good money even at those levels. I don't know about 40. I haven't. I would suspect that 40 starts to get a bit low grade. To be honest, I think even 60 or 80, I think starts to get a little bit low grade. Obviously, it depends on other factors as well, but that just means you're producing more volumes of liquid, so you need bigger equipment, and there's obviously a cost attached to that as well. Pamela asks, can you speak to your strategic partnerships and how these partners can support your growth? Thanks, Pamela. Well, I think this is really important for a project like ours. So we're growing as fast as we can, and we're turning into a bigger company. But let's face it, we're still a small company in comparison to the type of corporates that we're speaking to. And because of the similarities to an integrated oil and gas project, and we're also building, chemicals project at the back end. It's not just the cash; it's also the technical expertise and the project execution expertise. We're stronger together with another partner. So we are proceeding as if we're going it alone. We have the right people in place. We have a brilliant team, but I think we're stronger, potentially stronger, if we can bring in strategic partners at a joint venture level as well. So we are in discussions at the moment. We've already talked about that publicly, with term sheets, etc. We will start to sharpen up those discussions in the coming months once our bridging study is completed as well. And particularly on the upstream, it's capital intensive, and the oil and gas companies in particular have the balance sheets, the cash to be able to deploy to assist us here on the equity side. So I think there's many ways that strategic partnerships can support our growth. Pamela also asks, what other European markets are you targeting for future growth, and what are the headwinds beyond capital needs that you face? Um, well, I think I mean we're focused on in terms of European markets for sales. I mean, we're fully sold out for the first two phases of production for the first 5 years, certainly, and some of our production is sold out over a 10-year period. I think we cover, as customers, we cover the market very well in Europe, from cathode to batteries to the OEMs, the automotive OEMs. If you're referring to projects, I think we're primarily focused on the Upper Rhine-Graben. That's where the big lithium geothermal brine resource is in Europe. We also have a small project in Italy, but that's very early stage. I think we've got plenty of growth ahead of us in Europe, in the Upper Rhine-Graben in Central Europe. So I think we see at least three phases beyond the first one. As long as we have the capital to do so, we can grow that. I think the main headwind is execution risk. So we don't see so much technical risk. It never completely goes away, but we really see efficiently executing on time, on budget, as being the main risks here. So that's why we've brought in project execution people into our company from the energy industry who've built much bigger projects before, 40 billion euro projects instead of 1.5 billion euro projects in the oil and gas industry. And we're bringing in those lessons learned to make sure that we control that execution risk. Alexander asks, could you share some details on phase two? Can you highlight the potential of phase two? Well, we've done a pre-feasibility study on a phase two. We are updating that because we did a phase one definitive feasibility study, which is now in the bridging phase. So we have much higher definition, certainly on the process, the plants, and the equipment side. Well, really, what we're aiming for is a cookie cutter approach, so a copy paste approach to these plants. So we are developing a development center or cluster, if you like, around the area of Landau-Insheim in Rheinland-Pfalz, with the downstream production at Frankfurt Höchst. We are looking at another development center for phase two in the Upper Rhine-Graben, and more for a potential phase three and phase four as well, and also on the French side as well. I would expect that they would be very similar to phase one, and you may even get some savings, some capex savings, because you're learning from phase one, but you're also getting, in terms of the downstream parts, you're adding to an existing plant. You're adding more production lines to an existing plant, so you get some savings there as well. So I think phase two hopefully will be as good, if not a little bit better. Trevor asks, how soon do you see SLB involved in drilling for Vulcan? SLB, formerly Schlumberger, we recently announced we've signed an agreement there with them. They're providing 3.6 million US dollars of in-kind services. So essentially, that's services we get in which we don't have to pay for initially, which is really good as part of a wider agreement. Yeah, look, we're going to start drilling by the end of the year, but works, to be clear, have already commenced on our first site. I don't think SLB is involved just yet. There's still some things we need to do there, but we're already we bought the first pieces of land for our new drilling, and we're already preparing those sites for the first new production and reinjection wells to be drilled. I'm not exactly sure when SLB will be on site and be involved, but it'll be in the coming months, in the second half of the year. Thanks for the good questions.
Yeah. Actually, there's just another question from Alexander again.
Thank you. Alexander says, taking a look at the current lithium price, do you think that the market overestimates the upcoming supply of lithium? Will you have a floor price below which you would cut production? Well, I wouldn't worry too much about the lithium price and what it does in the next couple of years. The lithium market is growing at a compound annual growth rate of 30%. Um, I'm not aware of any other market in the world which is growing so quickly. It's a very small market at the moment, and it's growing into a much larger market in a very small space of time. What that means is that every time new demand or new supply comes on, you get a very dramatic swing in price, up or down. And that will continue, I think, particularly in the spot pricing, that will continue to be yo-yoing up and down. I think over the next certainly 2, 3, 4, maybe 5 years as the market matures. Um, but what is clear is that there is extremely strong demand and not enough supply coming on in the mid to long term. So structurally, there's a deficit, and that's the important point I think for developers building a project like ourselves. Now we have offtakes in place. Some of them have floor prices built in. Some of them are sort of a floor ceiling and floating in between. Some of them are fixed prices, and some of them are fully floating. So even if the lithium price went to zero, we would still produce at a profit under those offtake agreements. Um, so that's the advantage of having offtakes in place. It provides more stability to the producer and to the customer as well. In terms of a floor price below which you would cut production, um, I mean, as I said initially, that wouldn't be relevant to us because of the offtakes. Longer term, I think we can be a swing producer, um, i.e., we can produce, I think, lowest cost quartile, one of the lowest costs, if not the lowest cost producer out there. So I think we'll be very well insulated from future price gyrations in the lithium markets.
Okay, that has been all the questions for the moment. But if there are further questions, please do not hesitate to write them down. We will still wait a brief moment, and that's actually the next one.
Alexander says, curious on the process in a larger scale. Will you provide data on the layup, the lithium extraction optimization plant after go live? Absolutely. I'd imagine we will open it to the public as well. We're very proud of layup. As I said, it's the first tons of domestic lithium production in Europe and the first tons of zero carbon lithium produced globally. So um, we will, we operate with a pretty open book in terms of results. We have to as a public company. So we will absolutely be providing data. And as I said, we'll also be providing the public, the press, politicians, and potential partners to come and see the plant as well. So we welcome visitors when it goes live.
Okay, many thanks for this, for the answer. Actually, there's been no further question. One question from the audience is if the presentation will be shared via PDF.
Um,
Actually,
it, it is
yeah,
it's materially the same presentation as the one that is on our website, I believe. So it's just under investors and presentations. So if you go to that one, it's already on our website, available
uh,
online.
okay, then it will not be a problem if you also share it. So it will be available for download on research-hub.de, and there will also be a video, a record of this presentation will be available in a few hours, I guess.
Great.
So, as we don't have any further question, many thanks, Francis, for the insights and the outlook on Vulcan Energy Resources. And yeah, thanks a lot for being here today.
Thanks everyone for your time, and thanks for having me on, Harold. Cheers. All the
Okay,
best.
all
Thanks.
the
Bye.
best. See you.